Good morning, good morning, good morning. Today is Monday, the 27th of November, 2023. Just doing a real estate tap in with you for today. Um, so I saw an article that said that the mortgage balances are at the highest levels they've been in a long time, meaning the outstanding balance on a lot of these homes are up. Could be from borrowing against the property. Uh, you know, could be missed payments, things of that nature, and what's owed on the property um, is at the highest level it's been in a while. So I'll attach the article if anybody wants to read it. And then also it says that delinquencies are up and have been up over the last 6 quarters. So we're starting to see more people get into trouble, some form of foreclosure, whether it be like an early stage, which is the first 90 days, could be in a middle stage where it's obviously longer than that, 6 months, a year, something like that, and then it could be extremely delinquent, meaning a year or more. So we're starting to see it inch up and get back to pre-pandemic levels. So it's still not where it may typically be in a year in terms of foreclosures, but we're starting to see more people have issues making payments on their property. So I think this is something that's going to increase. Also, people have the most amount of equity that they have in their properties right now. I think the article said it's about 19 trillion. But what happens is that as these people get into trouble, because they do have equity, a lot of times the right thing for them to do is to sell the property. And then once we start to see more sellers come to the market, you'll most likely see prices come down. And we've already started to see prices start to come down. A lot of that is seasonal too, because of this time of the year. But a big factor in it is the demand right now has come down. I think there is still a demand for people looking for properties. But when you look across the country, you have certain markets that are considered affordable too. So you get a lot of areas that with an 8% or 7.5% interest rate, it becomes unaffordable. So right now is the time to focus on affordable markets and being able to create home ownership opportunities for people in the more affordable markets. But again, this is why we talk about notes, note investing and creating notes. People who are having issues, a lot of times what you can do to help them out is maybe take over their payment and then be able to create a note for a new homeowner to come in and live in that particular property. Credit with banks and things like that, them extending credit is starting to contract. So you have a lot of different factors right now that play into an environment where note investing, understanding notes, creating notes, buying and selling of notes, is the time right now. As delinquencies go up, you most likely will see banks start to pull together these non-performing loans that people are not paying on, package them up, sell them into the secondary market. Those larger companies will then go through their inventory, figure out what they want to keep based on what they bought, and then they'll start to sell off to smaller investors. This is probably something you'll see throughout 2024, going into 2025. And the other thing is that if we see a significant rise in foreclosure activity, the government, whether you like it or not, is going to step in. We're in an election year. They're going to have to step in to do something to help homeowners stay in their house, or try to assist them in some way, if we have a lot of foreclosures and things like that starting to happen. So being on the financing side, or being the bank, is really a good place to be right now for the foreseeable future. We can help people, we can create home ownership opportunities. So if you want to learn about notes, or if you want to start to invest in notes, please reach out, please make a comment, please share this with other people that may invest in real estate that and have them take a look at the opportunity that there is right now in the note space, as a real estate investment. So that article, like I said, I'll attach it, you can read it, but we're starting to see some of the effects, some of the lag effects after COVID and the monetary policy that went into place during that time, and the monetary response to it right now. We're starting to see some of those effects. So it's just in the beginning stages. I mean, it's not a wave of foreclosures coming to the market or anything, but this is the beginning of that process, and you just have to look at it, monitor it, and see where there is opportunity. But there's a lot of opportunity out there. We see deals all the time, that we can get into and be able to offer seller financing or terms to another buyer in affordable markets. And we also see a lot of good deals on the just buying of a note that's already been created in affordable markets, lower priced markets, and can get you a solid return on your money. So check out the article, and if you have any questions, concerns, I'll be back at 12:30 going live on Instagram, and then we'll back to our regular week schedule of Tuesdays and Thursdays. We'll go live in the evenings at 8:30 if anybody has any questions, and then we'll do a deal review on Thursday, 8:30. Go over deals that we've seen during the week, that we've come across, and just show some of the opportunities that are out there. So reach out. If you'd like to know more, you can always go to my YouTube channel, Abundant Capital Group. There's a lot of videos on there as well that go through note investing, how to get started, what to look for, different things like that. A lot of educational stuff there. So check that out as well, and subscribe to that channel if you like. And, now is the time to take advantage of the opportunities that are out there. All right. Everybody have a great day, and talk to you soon.